Going to do a quick overview of gold to the dollar. It's been a while since I've done one of these videos, but again, I'm just going to go from the ground up. So as you can see, my chart is completely naked. I'm just going to give you guys a full picture of what I do when I analyze price. It's a little bit different from the usual concepts that you see, but you might recognize some trading concepts, and some concepts might be a bit foreign to you. But I do want to make this as clear as possible, and regardless of whether you're a new trader or advanced trader, it is my desire for you to sort of get something of this. But yeah, so with regards to gold, now what am I looking at for in terms of today? Because I'm an intraday trader, so I look for opportunities on a day-to-day basis. It's not necessarily the case that every single one of these opportunities will be productive. But what I do anticipate is obviously some sort of structure to take shape. So, taking a look at the daily, the two things that I first like to identify on the daily time frame is my daily range. So, of course, daily range incorporates two parts. We have the next draw on buy side liquidity, which is obviously this high right there, and we have the next draw on sell side liquidity, which is the slowdown here. So these are two important elements of our daily range. Okay. Now, once that's identified, the second thing I like to look for is because, again, it's something known as the 3 day cycle where price has a tendency to rally for at least 3 days. It doesn't have to be three consecutive days. You can have, like, in your a day of rise and then a day of contraction, another day of expansion, and a third day of expansion. The market contract accumulated for 2 days before we saw 3 days of reversal. And then after that, we saw the same cycle to the upside again, and then continuation. So what we're seeing now is the market is actually accumulating, right? But within this accumulation, we've seen the market has delivered three bullish sessions earlier this week. And then after that, on Wednesday, we saw the reversal. So usually after a full cycle has taken place, we can usually anticipate some sort of an aggressive reversal. So we've seen that reversal is taking place, and we can also see the reversal obviously took place. That the market reversed at least 50% of this move. So this is what you one can refer to as a mean reversion. You can get an idea of this in a 4 hour time frame, where obviously we've seen the market gave an expansion from this low to this high, right? And then the mean, of course, is going to be the midpoint between this range. And we can see that the market reversed right into that midpoint. So from this point onwards, you can see the market is obviously inflected of a key high volume area. So we can anticipate that the market could give a bullish, obviously, continuation to the upside. And yes, of course, on Tuesday the 20th, so last week Tuesday, we saw the market created a new high in gold. There is no reason to believe that the market wouldn't keep on rallying. I do believe higher highs on gold is pretty much almost inevitable. It's just a question of when. But right now, what I'm anticipating, again, if we do see today's session trade and close as a bullish candle, then I will be anticipating at least another two more sessions of the market rallying to the upside. Taking a look on 4 hour again. So this is a kind of range that a lot of the time, typically, I'd say avoid trading in. But a 4 hour range also provides sort of scalping opportunities as well. If you are pretty what's the word? If you're focused, but also if you're precise in your execution, there are good scalp opportunities within ranges. But this is the kind of range usually it's best to avoid. But the way that I see this range, of course, is of course I see this initial bullish cycle that has taken place. So obviously from this initial low where the market took out this prior low, this is obviously the initial stop point that took place, right? And then thereafter, obviously, the market then began to rally. So the first point I always look for is the point where I perceive the market to have broken some sort of market structure. And then thereafter, after market has traded outside of the initial range, so obviously this would have been our initial trading range. This is the first expansion outside of that range. So for me, the second point is of my cycle is that first leg created. And then thereafter, of course, I'm anticipating the market to create a third leg. But the most important part of that third and final leg is it shouldn't be a trap. So we can see the market gave this sort of evening star formation back into the range, right? And then just chopped around for a bit and has sort of been accumulating within this range after taking out this short term low. So, in my view, obviously, the market is still bullish until the market takes out this high, right? I do still see our market cycle as bullish. It's just that the market is within that B range, and it's currently obviously within an accumulation phase. So the characteristic of that C phase of the market is, of course, vector acceleration. I do want to see aggressive price action shooting above this high, and it will come or might come in line with some news events. So we can see that we have GDP growth registered to take place later this morning at 8:30 a.m. New York time. And then, of course, we have again some more. So our core PC price index later on the 30th, which is, I believe, end of the week, right? So our core PC price index, and then we have ISM manufacturing. But GDP is a market move for gold, so I do believe that the escalation to the upside, expansion to the upside, might coincide with GDP that will be taking place later today. So in light of that, the question now is okay. So I tend to look for opportunities within Asia, which is right now. So right now for me, I mean I live in Bali, so the morning is for me Asian session, and I usually look for opportunities between 7 a.m. to around 10:30 a.m. my time. And then I look for opportunities New York Open, so that's from 7 a.m. UK time. So for me, that's 2 p.m. my time up until around 6:30 p.m. I'm also looking for opportunities to trade. So on the 1 hour time frame, again, I use exactly the same concepts that I use on the 4 hour. I still aim to identify the trend cycle on the 4 hour, on the 1 hour as well. So again, just so I don't get this mixed up, right? So this is 4A and this is 4B, which is indicative of the 4 hour cycle. Okay. Now going into the 1 hour cycle, right? I like to go from the high to the low and the low to the high. Okay. So from this high, we can see the market obviously gave this initial break right there. So this is R1A. Okay. So again, visibility, I'm just going to make this from the 1 hour upwards. And then of course, after that, we have an accumulation, first expansion. So this is 1B. And then of course, again, period of accumulation and then expansion to the downside, making this 1C. It's very simple. And then thereafter, again, the market then basically did a reversal to the upside. So of course, 1A is from here, so period of accumulation, break of structure, new high, making this 1B. All right, again, period of accumulation. Then the market proceeded to create a new high, making this 1C right there. And then thereafter, the market obviously accumulated vector acceleration, right, creating higher highs, and then obviously reversing. Now, again, all of this is the market simply doing a liquidity purge. So liquidity purges are a very important part of market cycles. So it's a liquidity purge right there. Oopsie, sorry. I'm one of those people that do not look on the screen when I type. Liquidity purge. Right, so we can see the market obviously purged buy side liquidity when it came back up here. And then thereafter, we can see the market obviously then gave a move to the downside. So again, we have a 1A, which is a break of structure, 1B, which is the first low thereafter, and then the market gave 1C right here, then reversed. So this is a reversal, took out this prior high. That's a stop hunt. So this is obviously the market taking out whatever stops that were residing above this high, right? So liquidity purge and stop hunts are characteristically different. I know it's a lot of traders that use smart money concepts. They like to say they're the same, but really the stop hunt and liquidity purge. Okay, similar things happen, but we identify them on the charts different ways. So a liquidity purge usually characterized by vector acceleration, so aggressive price action above prior highs. Especially, we can see series of highs that were created here. Whereas a stop one is could be just a wick just slightly above the prior high, and then the market then trades back into the range. So after that move, obviously we can see this is 1A right here. Okay, and then after that we can see this is obviously 1B. And now this is interesting, right? So we've seen the market has given a stop hunt, traded back into the range, given a 1A right there, 1B right there, okay? And then market is accumulating and is now taking out these prior highs. So On the lower time frame, what we're now seeing here is essentially a liquidity purge of these prior relative highs, right? And after this liquidity purge, again, what I will be anticipating is a bearish continuation. So the question is, where is price headed? So we've seen where price has been, right? Liquidity just stopped on top there, came back down into the range, right? And we have these lows down here. So we have this low and this other low that slightly took out this low from the 23rd. And then we have another low, a prior low down here. Okay. So where's price right now? Price currently is doing a liquidity purge at the start of the session. And where could price be heading afterwards? Well, I do see a potential. So again, when I what I like to establish when I'm looking at price, especially from different perspective, is I like to establish targets. So this could be our right there. So I just need to position this properly. There we go. Right. So what we could be looking at here is our H1 sell side target, right? Where price is currently heading to, right? So H1 sell side target is where. So again, if I'm going to be going short this morning or in the London session, then I will be looking to go short into these lows. Okay. So now that that's sorted, okay, now if we go down to the 30 minutes time frame, right? Now 30 minutes time frame, again, it's pretty much the same stuff that happens, right? The only difference that the only thing I look for is again session to session what is price done because you do need to be aware of something known as ranges because the market tends to go from range to range, seeking some sort of prior balance in an area that was previously imbalanced, right? And then after it reaches a prior area of imbalance, it balances that market out and then moves on to a new area of imbalance. So that's how the market moves. So it goes from buy side to sell side, always seeking prior imbalances. And if no imbalances can be found, then obviously the market would create some sort of new imbalance before shifting and then eventually come back down to that imbalanced zone. So what we're looking at here now is, again, after the market gave us stop ons, what did we see? We saw the market gave a very aggressive move to the downside, right? Now, there are some key areas of price that I do want to focus on. So the first is this high. Well, why is this high significant? So initially, when the market created this high, it pulled away, right? Now, these highs would have attracted sellers. So the sellers would have come into the market around this area, and those sellers would have been consistent in trying to sell the market because they would have been seeing, oh, the market is currently going down. It might probably come down to this low. They wouldn't have been wrong about that, right? So, but they would have had all their stop losses above these highs. So what happened is this aggressive price action came up and took all the sellers out by surprise, right? So anyone that came in as an early seller in the market would have been taken out by surprise. Okay, so essentially, this is an area where I believe is an area of interest because this is where that liquidity purge took place. So on the 30 minutes, what I like to identify is something known as AOIs. AOIs are where I'll be looking for inflections and where I'll be looking to identify entry opportunities from. Another thing I also want to look for on the 30 minutes as well is, of course, what I look for in the 1 hour, which is the trend cycle. Where are we within the trend cycle? Well, we can see the market obviously accumulated, but there wasn't really any swing point. Created a swing point down here. So this right here is my A point, my intermediate low, right? Then the market broke below that low, giving me what looks like a secondary break of market structure. Again, the way I see break of market structure is very different from the way someone that studies ICT or other smart money concepts will see break of market structures. And again, this is just based on I've done thousands of hours of chart study. I've have over 8 years of trading experience. So this is something that I've evolved and curated over a period of time. That makes sense to me, but also makes sense within the context of the market that I see every day within gold. So A, point B, market obviously then accumulates and then from point C. And after point C, obviously, we then anticipate some sort of a reversal, which is basically what happened in New York session yesterday. So market gave a bullish reversal yesterday. So again, it's point A right there. Now, this is an interesting one, right? Market gave a bullish reversal, pulled back, and is now broken above this high. Now, if price forms a swing point, that will create points B, effectively meaning this is a break of market structure. And then from there, I don't know where price would reach at that point, but what I'll be anticipating is for price to essentially retest essentially this somewhere in this area. So that would be my area of interest, right? And then from there, we could see a continuation into my AOI, where I'll be looking for a much more longer term sell opportunity. But for now, again, just waiting for price to do what it's doing. If it forms a new swing point, then that will be my point B, is confirming a secondary break of market structure to the upside, and then I'll be interested in a long continuation, within Asia and London, and then New York. I'll be more interested in selling in line with GDP. But taking a look now at obviously the 15 minutes, again, it's the same thing. So again, where is my area? So all of this down here we can see is a very balanced market, right? This is all a very balanced market, right? And then we can see that the market gave this move yesterday, right? Broke below this range, right? Another area of interest, one could say, is obviously going to be at the low of this range. Why? Because again, market accumulated, broke below, failed to retest, or failed to mitigate this range, this order block, right? So this unmitigated zone, prior unbalanced area, forms another AOI on the 15 minutes. So this is important because now price is broken above it. We could see a retest and then a continuation towards that secondary AOI. So these AOIs are areas of great significance, right? So now on the 15 minutes, I'm going to be looking for, again, the same thing, right? So this is going to be my 30 minutes A, right? So again, we can see that the market came down. So all of this is, again, this is my 30. I just need to distinguish this, right? Because obviously what I don't want is to get this all mixed up. All right, so we have my 30 minutes B. I'm just a bit cautious of time right now, 30 minutes C, because I'm limited to 20 minutes on these recordings. Right, so again, I'm not interested in this because I know coming down here, this is a full bearish cycle on the 15 minutes. What I'm interested in is, where did my bullish cycle begin on this time frame? So looking to the upside, obviously what I can see here is it's an easy to miss swing point that took place right here. So this for me is my point A on the 15 minutes time frame. Right, we can see the market obviously broke above the range. The market came down, retested. So again, where's the key area of volume of liquidity down here? This is our order block, right? So this morning star formation, right? So it's a very important area of liquidity, right? We can see the market after breaking above came down, retested it. 800 EMA acted as a dynamic area of support as well, right? And then after that, we can see now the market is pushing to the upside. So this point A, right? Market came up, created a new leg. We can see that this is point B in my books, right? And now what we're seeing is the market is going from point B into point C. So we're looking at the ending of the 15-minute cycle, the second leg of the 30-minute cycle, and we're still within the second leg of a bearish 1 hour cycle. So we can see how the market is very fractal. It's beautiful. Once you tap into the way price moves from cycle to cycle on each time frame and how they sort of flow into each other, it's a very beautiful thing because all you then need to do is wait for the right move that works for you. It gives you the right risk to reward. And that could mean waiting until London session for that move to take shape. But what I'm looking for is there going to be a potential opportunity for me to take advantage of within the London Open? So what I'm looking at on the fifth, what I'm looking for on the 5 minutes time frame now is this. So now that I can see that the 15 minutes has broken above, right? What I'm looking for is there a new break of market structure on the 15 minutes time frame after price took out a short-term low? So what I mean by that is we can see that this is a stop point right there, right? So the market came down, took out the stops, right, in New York session yesterday, right? So that's a stop point, right? And then gave me a move above this high. So this is what I call a classic break of market structure. Then this morning, the market retested high volume area, right, and has now rallied. Now, is there an unmitigated zone after the market retested the high volume area? And the answer to that question is yes, there is. The reason being is because the market came down, created an intermediate high, broke above that high, creating a secondary break of market structure. So my interest, right, my interest is now to basically look for a long from ideally this imbalance or this imbalance. So my projection is this: if price were to pull back, so if price were to pull back into the 800, so again, that 5 minutes 800 EMA acts as an area of dynamic support resistance. Price pulls back into this range, into the 800, then I will be looking to go long, right? I will be looking to go long with my target being, right? So go back to the 50 minutes, the secondary AOI, which is an area of balance, and it could be easy to get like maybe a 1 to 5, 1 to 6 to that range. I hope this helps, guys. Have a wonderful trading session ahead. Any questions, please leave it in the comments below. All the best.